Hey, what's up, traders? My name is Jasper Osita, your market analyst in ACY Securities. In this video, I'm gonna share with you the 8 steps how you can jumpstart your Forex day trading journey this 2025. So before we proceed in our video, please consider liking this video and of course subscribing in our channel for more videos. So it's not actually easy to navigate yourself in the market if you don't have any process to follow. The foundation in every skill, in every endeavor that you would want to take in life, it actually takes a process. So these 8 steps that I'm gonna share with you in this video is based on my experience, how I was able to navigate myself in trading the currency market or the Forex market. And actually, you can also use this in other markets. So it's not exclusive to Forex trading. It's not exclusive in Forex trading. So you can also apply this in different markets. So just in this case, we're going to use the Forex market as an example. So the first step that we need to understand is what is the difference between day trading, scalping, swing trading. So the reason for us to understand this, why do we need to first learn why differentiate day trading, scalping, swing trading? Because there are traders, and I'm also an example of that as they go along with their trading, there are times that day traders become swing traders, the swing traders become scalpers. So we need to know what environment we should trade based on our personality, because we don't want to jump from a day trader to a scalper to a swing trader and so on and so forth. So actually the day trading and scalping, they are almost the same. They just differ on the frequency of trading. So basically, scalping is you're in and out of the market quickly, like seconds to minutes. And usually, traders who use this method or this routine, they usually trade during the most volatile times. For example, London Open, New York Open, where there is an obvious market action. If you're not comfortable in doing scalping, we also have a higher time frame day trading. So we don't focus on the minutes or the seconds. We focus on an hourly time frame or 4-hour time frame as our higher time frame. So if you're not, you want to be in the balance, you want to be in the market but not on a fast pace, actually, this is the one for you. So typically, the trades last for minutes to few hours, and we can also call this a short-term price action trading. And the best day to trade using the this routine is during London and New York. Why? Because that's the best. Well, I don't know with others, but based on my observation, that's the most volatile market sessions that we have. And for the swing trading, actually, we can also include the trend following strategy with this and the position trader. They actually last for several days and for weeks. So if you don't have the time to watch the markets, this is actually for you. So my question is, what kind of market or routine that you want to take? What path do you want to take based on your personality? Actually, we have a lot of trading quizzes online that you can search for you to determine what kind of trader are you based on your personality. So why do we always say about the personality? Because it's hard to fight the trend. It's hard to go against the trend. Like, for example, you want to be a scalper, but you can take the fast-paced environment. It's hard for you to process information in a quick period of time. So there would be a disconnect as you go along. The next step that you need to consider as you day trade is what time frames and market sessions are you going to use. Usually, this question can be answered by what time are you available during the day. All right. So number one is, of course, we have the standard day trading approach. You can use the hourly time frame as your higher time frame, and you can use your lower time frame, which is the 15-minute time frame, as your execution time frame. Actually, you can go as low as 5-minute and 3-minute time frame. So actually, this is the one that I'm using as an approach in the market because of course, based on my personality, it's balanced and reliable. So why are we using 2 time frames to frame our trades? Because of course, if we're gonna go on the lower time frames without considering our higher time frame, we might be trading not knowing that we are going against the trend. So as much as possible, we always want to have a higher time frame to refer to and an execution time frame to confirm that we have an entry confirmation in that higher time frame. So the best markets during this time, of course, is London and New York. The second one is this is the precision scalping. Actually, this is much intense. It's fast. So traders actually can go as much as a minute to second to trade. So what they use is they refer to the higher time frame, like the 15-minute time frame, as their trend observation time frame. So this is where they observe the trend, where is it going, and once they confirm the trend, of course they go to the lower time frame, which is the M1 or the M5. Or actually it depends. So I'm not saying that these time frames are the golden time frames. These are just the time frames that is being commonly used. You can actually experiment if you want what works for you. And the last is the trend following strategy, which uses the 4-hour time frame as their highest time frame and the 15-minute time frame as their entries. So you need to decide what time you are available, not the time that you want, because it may contradict with your availability. So you need to consider when is the best time you are able to focus in the charts. So day trading is a very competitive routine, a very competitive style of trading. So you really need focus on this one. So once you identify the time frames that you want to trade, the sessions that you want to execute, your strategy, the next thing that you need to consider is how can you choose the right Forex pair to trade. So the challenge in trading Forex is we have a lot of currency pairs available in the market. There are brokers actually offering as much as 300 pairs to trade, which is, I'm not saying it's absurd, but it's available in their broker, which is also an advantage for those who are trading in other countries. But as a beginner, as much as possible, we want to trade a few select currency pairs. Not because we cannot trade the other pairs, but of course, as a start, you need to have a mastery from one currency first to another before jumping to other currencies. Actually, what I highly suggest is start first in the majors. So what are the majors? Those are pairs that are paired with USD, so with US dollar, pairs that are Euro, Pound, Aussie dollar, New Zealand dollar, Swiss Swiss dollar, and Canadian dollar, and of course the Japanese yen. So you can actually start with those. The reason for that is those markets have the highest liquidity and volatility. What is liquidity and volatility? Liquidity is, of course, there are more market participants in the market, which allows us to have tighter spreads. This means that the bid and the ask are so tight that you could execute on the desired price that you want without any slippage or anything like that. And of course, we want a pair that is volatile. What do you mean by volatile? A market that actually moves. All right, so if we have these two elements in the currency pair, well, actually, that is good to trade. So actually, you can check the article that I made, Market Education in ACY Securities. So this is a guide how you can choose the best major currency pair for trading. I'm not saying that you don't go to minors, exotics, or the cross pairs. This is just a suggestion since you are just starting in trading, or maybe you're just getting your foundation right as you go along. So you can check out our guide in this link. Just go to this link, and actually you can just click acy.com and search for market education, and go to my link, and you can see all the education materials in this website. The next thing that you need to consider is what strategy are you using? Right, so of course, if I'm gonna make an example, you don't want to go to war without the appropriate weapon and without the appropriate ammunition. For you, I'm not saying that being in a war is we want to succeed, but just an example, we need to be ready as we trade the markets. So the question I have for you is, what weapon or what strategy do you have in mind? So as for me, as a day trader, what I use is a simple EMA, or moving average 20 and moving average 50 breakout strategy. So the goal for this strategy is just for me to look for new price trends and follow that moving average until I hit my take profit. Not just a take profit, there are times that the trend is strong. I will follow the moving averages until it bends. All right, so we have a step-by-step trading plan that I'm going to show you also in the charts. First is we need to identify what is the trend on the higher time frame. After identifying the trend on the higher time frame, we need to look for a consolidation range or a sideways range before we look for an execution. Our goal is for that range to break with the full close, whether it's above or on a downside. And the fourth step is setting our stop loss and take profit and exit when the trend weakens or when we already hit our take profit. So let me show you the chart. So in this chart, as we see, it's already trending. So this is for euro dollar. I was able to trade some parts of this trend, but basically what you can do is there must be an obvious trend. So in this case, how do we know if we are already in a trending condition? Price must be above the moving average 20 and 50 to consider that we already shifted from a downtrend to an uptrend. The next step that we want to take is, let's look for ranges. Let's look for sideways to look for us to frame our opportunities. In this case, this is our range. So as you can see, let me check what time sessions is this. So basically, this is the session from last night, actually not last night, but from New York to Asian session, transitioning to London Open. So by the time that price was ranging from the New York until the London Open, it broke out 2 hours after the London Open. So this is now our trigger for an upside opportunity. So of course, we need to first wait for the price to close above, so we can be sure that it's a breakout, not a fake out. So what's the difference between a breakout and a fake out? A breakout, of course, is an absolute close above the range or above the resistance. A fake out is it tried to go up, but it's not strong enough. It went down and the candlestick became a wick. So it did not close above the range. So in this case, it closed. As it closed, we can actually enter on this candle and set our stops just behind the range. So why behind the range? Because the premise is price already broke out. Why doesn't need to go back below that range? So that's the premise, and as much as possible, we want to protect our stops behind structures. So in this case, we already entered in this candle. Of course, this is already hindsight, as you can see, but we're just making an example how we can use this strategy. All right. So price went to the upside. It's more than, I think, more than twice or thrice of your risk. You can also do other entries. You can scale up as price goes along. So you can do that until a moving average has been broken. So that's a day trading strategy that you can do. I'm not saying this is the holy grail or this is the perfect one, but this is just an example that you can use to start in your trading journey. So we have a lot of strategies online that you can search, but this is the one that I'm actually using in my day trading strategy. So the next thing that we need to consider after learning a day trading strategy, aside from this one, is backtest. So what do I mean by backtest? You need to go back to historical charts just to see how your strategy is working. Not just to see how the strategy is working, but at the same time for you to be familiarized of the strategy that you are using. So we have a lot of backtesting softwares that you can use. These are just a suggested ones. I'm not saying these are the best ones, but these are trader beginner friendly that you can use. FYI, just for your information, I'm not paid to or sponsored to show these softwares, but these are the softwares that you can use as you start in your backtesting. So this one is TradeZella. So actually, TradeZella is also a trading journal that you can use, and they have a new feature, and that is a backtesting software. But of course, this is a paid version. You can also use FX Replay. I'm I have used this before, but this is also paid. Actually, all the trading backtesting software that I'm gonna show here are all paid. So like the trading view, you can also use this one. So you just need to replay a specific time period of your choice and just press the forward button for you to see how this strategy works. So basically, I'm not gonna dive deeper in backtesting because I have an upcoming content that will discuss more about this one. So basically, what I'm showing you is some softwares that you can use to backtest your trading strategy. So of course, as a trader, we need to practice as we get familiarized with the strategy that we are using. So once you finish your backtesting routine, you need to consider the risk that you're gonna take. All right. So trading is the key in trading is capital survival. So if you don't have any capital, of course, how can you go in the markets? So the golden rule, it's considered golden because many of the profitable traders out there are using this method. So they're risking only 0.5 to 1% per trade in their accounts. Always use a stop loss. Never forget placing your stop loss whenever you enter your trades. Why? Because we need to, of course, lessen the risk that our accounts take whenever we engage in the markets. As a start, I highly suggest that you target at least twice or thrice of your risk. And never revenge trade, and always keep a trading journal. So, um, the key in longevity in trading is managing our risks. It's not about how good you enter the trade. Anyone can do that. But the question is, how good are you in managing your risks? So beginner tip. So if you lose at 3 trades in a row, I suggest you step away from the charts, take a break, review your trades, reset your mindset, maybe take a quick stroll in the park, anything that would clear up your mind. So the goal is just to reset your mind if you take a series of losses. And next is, of course, as a day trader, you need to have a routine during the day. You need to have a pre-market preparation. You need a ongoing market routine. And at the same time, you need to have a post-trading review. All right? So, of course, our pre-market preparation is you need to check the news, identify the levels that you need for you to consider that this is tradable, this is an opportunity. Review also the market sentiment, set alerts as long as it's necessary. So you need to prepare yourself before your trading day starts. And of course, during your trading session, you need to have a high level of focus because of course this is day trading. Follow your risk management, avoid avoid over trading, and of course be patient with your parameters. So the problem with many traders is not being patient with their exact parameters. So I highly suggest that you focus on your setup, focus on your system before jumping into the markets because it's really costly if you enter without following your system. And of course, at the end of the day, the key for growth and of course continuous development is for you to have a performance check at the end of the day. So record your trades, what went right, what went wrong, and of course, you have to plan for the next day. So I have built, of course, another content for you to check out. That's the 3 steps to build a trading routine for consistency and discipline. So you can check out this content on the same link on the same website for an in-depth routine prep for you for your day trading. Okay, and lastly, of course, before we go to that, just a beginner tip: consistency is everything. Always trade your plan, not basing on your emotions. So always check your heart, what's happening during the markets. Stick to your daily routine. That's why we have a process, because we believe that process helps us to have better results. Keep learning and improving, and at the same time is always have a growth mindset. All right, so it doesn't matter how much you know about what you know. What? It doesn't matter about, it doesn't really matter how much you know, but the question is, how much are you doing with what you know? All right. And lastly, for you to have a real-time experience in the market, I highly suggest that you open a demo account so you can test the markets on real time. All right, so you can use a demo account. At the same time, demo account helps you to be risk-free as you start in your journey. All right, so of course, if you want to have a real-time emotion at the same time, you can also do a live account by at least depositing how much money are you willing to risk. So it depends actually on you. So journal your every trade and just continue to adjust and optimize. Okay? So actually, we have a lot more that you can do for your day trading journey for Forex. It's not just 8 steps. We can actually do more. But these eight steps can help you as you navigate yourself in your Forex day trading journey. So, my reminder for those who are starting in their Forex day trading journey is always have a growth mindset. So it's not easy to learn the markets, but you can make it simple just by following step-by-step steps. All right. So I hope you learn a lot from this session, and please wait for other educational videos that we have in ACY. You can also share this video for those for your friends or families that wanted to engage in the markets. So this is Jasper again, your market analyst, and see you again on our next video. Bye.